give wisdom to our government officials because some of them are using the present crisis to further their own agenda, and we do not need that at this moment. So please indulge me on that. Anyway, I'd like to welcome our president, Mr. Jeng Pascual, the CFO of Pilipinas Shells, to give the welcome remarks.
Thank you very much, Tony Boy. Good morning, FINEX members and guests. Welcome to today's webinar on Beyond Financial Inclusion, a focus on MFIs and the financial inclusion of women. This is the third session of the Beyond Financial Inclusion series, sponsored by the Financial Inclusion Committee, chaired by Ms. Gay Santos, and the Women in Finance Committee, chaired by Ms. Terry Magleo. During our annual FINEX conference last week, one of the very key and relevant topics we tackled as we explored the future of finance was the current state of MSMEs and the world-class support needed to carry them beyond the pandemic. We learned that globally, there is growing optimism among lending institutions that SMEs will be able to survive the crisis as governments implement their stimulus measures and support the shift towards digital platforms and e-commerce. Here in our country, and I think Tony Boy already referenced this, we eagerly await the passage of the COVID-19 rescue plan as embodied in the 2021 national budget and the pending bills on fiscal reforms and stimulus measures, such as CREATE, GUIDE, and FIST. The rescue plan and fiscal reforms are so badly needed to save businesses and protect jobs. We can only hope that our legislators are able to look beyond their terms of office, rescue our struggling economy, and fight for the country's future instead of among themselves. Today, we will focus on a rescue plan and future prospects for a specific financial sector, microfinance institutes, and the clients they support, typically the small, rural, and often women borrowers who do not have access to the banking system and formal capital markets. We are privileged, therefore, to have with us this morning a distinguished panel of speakers to talk about this topic. Dr. Jennifer Isern, the CEO of Catalyst Global Impact, Dr. Ira Lieberman, Chairman and CEO of LIPAM International, Dr. Jaime Aristotle Alip, Founder and Managing Director of the Center for Agriculture and Rural Development, or CARD, and Ms. Christina Maines, Senior Advisor for Market Development, Southeast Asia in Women's World Banking. They will be ably, their discussion will be ably moderated by our FIC Chair, Ms. Gay Santos. Before I pass over to back to Tony Boy, I would like to once again thank our speakers, our FIC Chair, Gay, Liaison Director, Ian Guevara, Women in Finance Chair, Terry Magleo, Liaison Director, Larry Concepcion, the Financial Inclusion and Women in Finance Committees, and the FINEX Secretariat for making this webinar possible. And thank you to everyone for participating. I hope you have an enriching webinar, and please continue to take care of yourselves and each other.
Thank you very much, President Jeng, for your welcome remarks. I'd like now to turn you over to do her opening remarks. Is Esther Terry Magleo, a longtime FINEX, lifetime FINEX member and former director. Esther?
Yeah, thank you, Tony Boy, for that kind introduction. Thank you, President Jeng, for your inspiring welcome remarks. You know, we're still raving over the phenomenal success of our annual FINEX conference held last week. Again, congratulations, President Jeng. My fellow officers, members, guests, and all participants, a fantastic morning. I'm Terry Magleo, Chairperson of Women in Finance Committee of FINEX. I'm very, very passionate on today's topic, being one of the pioneers who dared and endured the to set the pace of fintech industry in the Philippines as a co-founder of Paynamics. Uh, the, we have been leaders on online payments in the Philippines since 2010. Hence, I have witnessed the challenges and opportunities of financial inclusion in the country, as well as the vital role of fintech industry, particularly Paynamics in providing solutions and technology for universal financial access. Ostensibly, the Philippines, alongside India, garnered the spotlight in the news not about the number of COVID cases. According to Global Microscope 2019, the Philippines ranked as the fifth best among 55 countries worldwide and first in Asia, along with India, in terms of top countries that promote financial inclusion. Nevertheless, the micro, small, medium industries or MSMEs constitute 91.52% of the current struggling and sluggish Philippine economy, while 90% of 180 million poor households in Southeast Asia lack access to institutional financial services as per Asian Development Bank report, which partnered with the Philippine government to implement innovative initiatives around digital finance to improve poor Filipinos' access to financial services and products. Let me share with you briefly my personal experience in Paynamics, which uses innovation to enhance and automate financial services and processes and promotes final, financial inclusion through the use of electronic and digital payments. Our online payment systems empower different platforms and services that allow companies, entrepreneurs, government, and other economic agents to transfer money on a daily basis without having to use cash. This new demand for instant and convenient payments has become increasingly more prevalent in today's economy. We also have responded to this new demand for digital payments from MSMEs, brick and mortar stores, online sellers, and even individuals through our latest service, PayBiz. You see it at my back. PayBiz is an e-money account and secure payment acceptance facility that lets businesses achieve more sales by making their payment collection simple and efficient. It is designed to solve collection and disbursement pain points for small and medium enterprises because we recognize that SMEs play a significant role in the economy. We wanted to democratize access to online payments and enabling small merchants to have access in our platforms using Pay via Link, which targets merchants that sell through digital channels such as Facebook or Instagram, as well as freelancers, consultants, or professionals who need to collect payments through email or messaging platforms. And through the all-in-one QR code for the merchants with physical stores or offices, including restaurant owners, food stalls, courier services, taxi franchisors, charity organizations, organizers, and accommodations. They needed to be more competitive, and a lot of MSMEs lack access to modern digital means. Connectivity can be overwhelming for many of them. The solutions offered by Paynamics or by PayBiz can help them not just ease the pressure but also eliminate this burden completely. PayBiz aims to help them accept payments through various payment channels where the process is being simplified. We wanted to equip them and be able to make payments simple for them. In fact, Paynamics is coming up with a series of webinars to educate MSMEs on digital online selling and online payments for free. Once you sign up, there's no initial fee for the integration, and the process is conveniently done online. We as finance professionals have greater role and responsibility to promote and adopt financial inclusion. As such, let us get educated on microfinance, its challenges and future, global, Asian, and Philippine perspective, as well as women financial inclusion from our invited and remarkable guest of speakers, Dr. Jaime Aristotle Alip on the state of MFIs today, under the pandemic and what is being done towards a sustainable path. Christina Maines on Women's World Banking Programs for Women, Dr. Ira Lieberman on the future of MFIs based on the Brookings Institute recent book study, and Dr. Jennifer Isern on the future of MFI specifically in India and Asia Pacific. However, before we proceed further, let us thank President Jiang, the program participants of this Financial Inclusion Committee, Tony Boy, and past President Ebot, and the Financial Inclusion Committee Chair and Women in Finance Vice Chair, Gay Santos, who efficiently organized this webinar, and our ever-resourceful Secretariat, Mike, Judith, John, and Rafi, Alex, for putting all this up together. Let's all thank our renowned of infallible experts to be introduced properly in a while by Tony Boy. So are you ready to be in our financial inclusion? This does not require face mask, does not require face shield or social distancing. Now, finally, we can hug safely this microfinance through continuous innovation of digital finance, just like how I have embraced this through pandemics. So together, let us spread this financial inclusion virus for the greater glory of God. Mabuhay ang MSMEs, mabuhay ang Pilipino, mabuhay ang tayong lahat. Salamat po.
Thank you very much, Terry. That was a very good opening remark. Um, we have uh, we have four very good speakers for you today, this morning. Okay, let us start with Dr. Ira Lieberman. Oops, sorry. Yeah, let us start with Dr. Ira uh, Lieberman. Just let me get my notes. Okay. Dr. Lieberman has over 4 decades of international development and private sector experience. He is currently chairman and CEO of LIPAM International, an advisory firm that works with governments, international finance institutions, NGOs, and the private sector in developing and transition countries. Dr. Ira has held several board positions for major institutions that serve the microfinance sector. He also taught on governance at the Boulder Microfinance Institute for 10 years and has published extensively on several areas of microfinance and SMEs. In 1995, Dr. Ira started the Secretariat for the Consultative Group to assist the poorest, serving the World Bank and 26 other world donor institutions and foundations, and managed CGAP as its CEO from 1995 to 1999. He also served as acting director of the World Bank Group's SME department and chaired the donor committee for small business. Our second speaker, sorry for that. Our second speaker is Dr. Jennifer Isern. As you can see from her, after her name, Jennifer Isern is a certified financial analyst, and she offers 30 plus years of experience in 65 plus countries on financial sector development and investing. Her passion is combining financing, technical assistance, and innovation in high impact projects to improve the quality of life for people around the world. The founder and CEO of Catalyze Global Impact, LLC, working with strategic organizations in targeted development sectors, including new technologies, financial sector, and private sector globally, with a focus on Africa and Asia. She serves on several boards and as advisor to investment funds, foundations, and associations in Europe, the USA, and globally. Prior to launching her own firm, she held positions with increasing levels of responsibility across the World Bank and International Finance Corporation for over 23 years, helping their teams deliver high-impact results. Her last two roles were as senior manager based in Hanoi in 2016 to 2019, and for finance and private sector development team in East Asia and the Pacific, and is based in New Delhi 2009 to 2018 for financial sector team in South Asia. From 1996 to 2009, she was one of the founding team members and lead specialists at CGAP, managing our work in Africa and China. The third speaker would be Dr. Jaime Aristotle Alip, and he's no stranger to FINEX because Dr. Alip has actually been one of our speaker in our GMM, in a GMM sponsored by the Financial Inclusion Committee about 2 or 3 years ago. I can't remember. Okay, so just to give you a brief background, again, reintroduce to you Dr. Alip. He is the founder of CARD, Center for Agriculture and Rural Development, mutually reinforcing institutions. He is also a 2008 Ramon Magsaysay Awardee for Public Service. Dr. Alip is now the Chairman Emeritus of CARD NGO and continues to chair the board and major institutions of CARD MRI and CARD SME Bank and CMDI. Started in 1986, CARD MRI now is a group of 23 mutually reinforcing institutions whose major focus is poverty eradication in the country. As of September 2020, CARD MRI has a total outreach of 7 million poor families without total outstanding loan of 27 billion pesos. Its microinsurance arm, CARD MBA CPMI, insures 25.5 million individuals. Before, in a past life, Dr. Alip served in various key positions in the Philippine government. He was Undersecretary of the Department of Social Welfare and Development 2002 to 2003, Assistant Secretary for the Department of Agrarian Reform 1996 to 1998, and Deputy Executive Director of the Agricultural Credit Policy Council 1988 to 1992. Assistant Secretary to the Department of Agrarian Reform, he was given the Secretary's Award in 1998 for his contribution to the Agrarian Reform Program. Ernest & Young recognized him as the Social Entrepreneur of the Year in 2006, Most Outstanding Alumnus of the University of the Philippines Alumni Association in 2007, and the President of the Socialist Republic of Vietnam recognized Dr. Alip more than 2 decades of work in Vietnam in the field of poverty eradication with the Order of Friendship Award. In November 2018, he received the Elevating Homegrown Innovation Award given by Ocean 18. He also received the prestigious Ramon V. Del Rosario Award for Nation Building in July 2019. Our fourth speaker is Christina Maines. Let me just get the, okay. Christina Maines is a senior advisor of market development Southeast Asia. Christina is the leading Women's World Banking efforts to expand its Southeast business footprint. Women's World Banking is a 40-year-old US NGO that works to expand women's financial inclusion and strengthen women's financial resilience around the world through its network, consulting solution projects, leadership and diversity training and program, and private equity arm. Our moderator for this event will be our very own Gay Santos, who, let me give you a brief, for those of you who do not know who Gay Santos is. Gay Santos is a very active FINEX member, and Gay used to work for the World Bank Group for over 25 years, where she held various positions. and she worked in investment and portfolio management and credit operations, operational risk, and advisory services. She conceptualized and designed the IT system as well and altered the operational procedures of the IFC of the World Bank Group. In her last role at the International Finance Corporation, Gay was a senior financial sector specialist and led the Financial Infrastructure Inclusion Program of the IFC World Bank in the Philippines. She led the engagement with the government and private sector, the credit infrastructure, and secure transactions reform and passage of the Republic Act 11057, the Personal Property Security Act, a law that seeks to broaden the use of movable assets as collateral for MSME, which was passed in August 2018. This is among the fastest moving bill in Philippine legislative history. Now retired, Gay Santos has given more time for FINEX. So let me now turn you over to our first speaker, Dr. Ira Lieberman.
Uh, it's my pleasure to be with you this morning, this evening for me. And I want to thank the MC for his gracious introduction, and to the president of FINEX and the secretariat, Gay, Michael, and Judith, for putting together such an outstanding program. I'm going to go back into a little history and take you to the present moment in a rapid pass. When I founded CGAP in 1995, and actually Jennifer Isern was one of our senior staff focused on Africa at the time. Almost all of the MFIs that we looked to fund, and we had a funding pool of about $40 million, plus we had, within 2 years, we had 26 donor institutions funding about $300 to $400 million a year. Almost all the institutions were NGOs or cooperatives, and they were very small, only having a few thousand clients. There were a couple of banks, and if anyone knew anything about microfinance, they knew about Grameen Bank. And then if they really knew something, they knew Bank Rakyat in Indonesia and Banco Sol in Bolivia. And that was pretty much it. From 1995 to 2010, there was very rapid growth of the industry, maybe 20 to 25% a year on a compounded basis, which is indeed very rapid for any industrial sector, any financial sector. And one of the most important steps was the commercialization of MFIs, which meant they took on investors, and many of them became regulated financial institutions. And the important part of that was that they could mobilize savings. It was not only important for their capital base, but it was very important for their clients to be able to save safely. And in my view, safe savings may have in fact been as important or even more important than the working capital loans that were characteristic of the industry. During this period also, they developed investment funds. By 2010, I would say there were 100 of them, of which 70 were debt funds and 30 were equity funds, and several of them were within family of funds, a few of which handled over $1 billion of investments in the sector. So besides savings mobilization, the ability of investment funds to invest in MFIs was another critical step. And we saw the rapid growth and consolidation of MFIs. Many had over 10,000 clients within that period, and several reached, many had over 100,000 clients, I meant to say, and several reached 1 million clients. And many of the institutions were able to borrow from the interbank market. Some raised bonds, and several even went public, like Compartamos. uh, or BRAC's Small Business Bank or Equity Bank in Africa. And that was an important signal to investors that MFIs, large-scale MFIs, could be important players in the financial sector in their respective markets. And some even became multinational, like BRAC and Compartamos and Grameen and quite a few equity bank within Africa. So by 2010, microfinance had a very strong institutional base. There were many very strong MFIs that were mobilizing savings, and they had very large client base. The success of the industry was that the proof of it was that there were no systemic crises in the industry. There were some small country crises, some of them politically driven, like in India and in Nicaragua as examples, or in the Balkans. But there were very few crises relative to the rapid growth of the industry and how quickly the industry spread throughout the world. In fact, losses were on average under 1%, which all of the financial sector people who are online or leading this conference will tell you is very extraordinary for financial institutions or financial sector over time. In more recent years, the important breakthrough has been technology, and that is both fintechs and digital finance. And that's a big issue, and it's been a difficult issue for MFIs to both absorb and integrate within, but it will be critical in time. Finally, we have the what microfinance did for women entrepreneurs. First, at CGAP, we only funded MFIs if they had 50% or more of women borrowers. Second, there was always a strong emphasis on women in microfinance, and there was always the view that women were better payers and more reliable. I've never seen proof of that, but I'm prone to believe it. Also, if women ran family institutions, family style firms, then those firms were geared to feeding the family, clothing the family, providing health care for the family, and very importantly, for next generation, providing education. And when I did tours of MFIs in the Philippines and in Mexico and in Vietnam and other countries, the women would always tell me that at least the children were getting educated. So when there's criticism towards microfinance and not alleviating poverty, I would argue that it's a next generational issue. The kids who get educated are indeed going to be the ones that have the great benefit and will do better. Finally, we're in the current situation where the World Bank estimates that 80 to 110 million people will fall back into poverty. And the microfinance industry currently serving about 300 million people around the world, depending on how you count the numbers. In China, it could even be larger. Will need to go back to basics. The investment funds will need to provide restructuring support for those institutions having difficulty. They will need to provide funding for their poor clients. And although it's always been the view not to refinance clients, I'm afraid that we will probably have this need to refinance a lot of the clients. So I'm going to stop here now. We can get more during questions, but this is an existential challenge. Not only is the COVID an existential challenge for the world, but it's certainly an existential challenge for our sector. And I think your institution is a critical type institution to see that the industry in the Philippines moves forward on a positive basis. So thank you again very much for having me as part of this panel.
Yes, thank you very much, Ira. Good morning to everyone. Thank you for walking us through the historical perspective on the evolution of MFIs, turning points such as the commercialization, the safe shift to safe savings, and of course the challenge, the outlook for the future in terms of technological transformation. I'm proud to say I have bought your book. So please,
Thank
I
you
mean,
very
this
much.
is the latest study on microfinance, covering and addressing the question on what the future holds for microfinance. So this is by the Brookings Institution, authored by Dr. Ira Lieberman, and also a chapter focused on Asia, authored by Dr. Jennifer Isern. That being said, we're shifting from global to regional. So I turn it over to Dr. Jennifer Isern. Jennifer, please.
Thank you very much. And a big thanks to President Jeng and Tony, our moderator, Esther, Gay as the panel facilitator, and the entire FINEX team. Good morning or good evening for those of us like myself here in Washington, D.C. Who are participating. Discussion, we have an excellent panel. The Asia Pacific region has really experienced dramatic increases in financial inclusion since the 1970s, and is a diverse region. According to the FINEX database managed by the World Bank Group, 81% of adults in East Asia have access to finance, which is an increase from 55% just 9 years ago. And in South Asia, similar levels, 70% of adults have access through a formal account. And that's more than double the level that they were at in 2011, which was 32%. And of the 6 countries globally that have achieved financial access levels above 80%, again, of adults, 5 are in Asia: Mongolia, Malaysia, the People's Republic of China, India, and Thailand. Yet, financial inclusion is highly uneven across Asia Pacific, with levels below 35% in Cambodia, Vietnam, the Philippines, Pacific Island countries, and Afghanistan. And looking more closely, there are significant gaps in gender and income. We see an 8% difference between men and women in East Asia Pacific, percent in South Asia, and those are similar to global results. There is some good news with figures for Cambodia, Indonesia, Myanmar, Vietnam reflecting more equal access for men and women across Asia Pacific. There's also an income gap where half of the unbanked are concentrated in the lower 40% of income levels across countries. In East Asia Pacific, the income gap is 19%, while in South Asia, the income gap is 9%. There's also an urban and rural gap, but unfortunately, the current FINEX data, which was released in 2018, doesn't have that level of detail. And I just want to have a footnote there that, again, this information is as of 2018. There'll be a new FINEX, I believe, next year, and hopefully we'll see even more progress, although the current situation will certainly impact that, as Ira indicated. Another issue is access versus usage. So globally, approximately 25% of accounts in financial institutions in emerging markets were inactive over the previous year. And in Asia Pacific, several countries reported relatively higher levels of inactivity. India had the lead at 39%, then Sri Lanka, Malaysia, Thailand, Indonesia, Nepal, all up to anywhere from 26 to 14% of inactivity of accounts. Now, if people are not using their accounts, is this a sign that the services that are being offered are not yet well adapted to their client preferences? For example, savings, which is a foundational financial service, savings through long-term savings and pensions is relatively low, with 23% of adults in East Asia Pacific and even lower at 11% in South Asia. Now, usage can also cut another way. It can be a different kind of issue if it's too much usage, especially where access to credit is quick and easy. And we see this in some of the overheating markets. And concerns about over-indebtedness have flared in several countries in the region. Ira made reference to the Indian microfinance crisis that launched in October 2010, 10 years ago, which was really triggered by perceived levels of over-indebtedness. And other countries where concern has been raised include Cambodia, Papua New Guinea, Nepal, Sri Lanka, Northeast India, and the greater urban areas around multiple countries across Asia Pacific. Now, while we are seeing tremendous progress, it's uneven and progress isn't guaranteed. Just one example, Sri Lanka experienced a decrease in account holding by 9–10% from 2014 to 2017. And during this same period, access to finance remained flat in Cambodia, the People's Republic of China, and Vietnam. Now, globally, 1.7 billion people still lack access to formal financial services. And the majority of the world's excluded adults live in Asia Pacific. And they are concentrated in 6 countries: the People's Republic of China, India, Pakistan, Indonesia, Bangladesh, and Vietnam. Now, many actors are involved in financial inclusion, and Asia is home to some of the oldest and best known institutions globally. Now, MFIs are really built, purpose-built to provide financial services to the excluded, especially low-income people and women, rural people, and microenterprise practitioners. And the first wave of MFIs really launched in Asia in the 1970s. Of course, Bangladesh, Indonesia, India, Nepal, and the Philippines, including Card Bank, which is founded by Aris, our co-panelist this morning. Governments also launched special purpose specialized banks. BRI in Indonesia is a great example, but many countries have their own versions of this, and Ag Bank in China, and State Bank of India in India, etc. Third group are the financial cooperatives, and you could argue that they've played a role globally even since the late 1800s. Many countries have examples of successful financial cooperatives. A fourth group are the rural banks, and they're very Philippines, of course, and Indonesia, India, and other examples globally, Ghana, etc. The postal finance institutions are really ubiquitous across many, many countries. Some of the largest globally are in China, Japan, and India. And then, of course, the new actors, as Ira and Gay alluded to, offering digital finance and also known as fintechs. Specific, 58% of adults have made at least one digital transaction over the past year. And the highest levels, 85% of adults in Mongolia and Malaysia, People's Republic of China, and Thailand. It's lower in South Asia, 28% of adults have made at least one digital transaction, and the highest levels across Nepal, Bangladesh, and India. Just a shout out for the Philippines, two of the earliest mobile providers globally, in addition to what we saw in Kenya and the big boom with M-Pesa, were Smart Money and GCash in the Philippines in the early 2000s and mid 2000s. And BSP, the Central Bank of the Philippines, was an early lead in promoting financial inclusion and digital finance with enabling laws and regulations. I think really insightful approaches. I actually organized a number of policy seminars inviting BSP as speakers because they were just so well informed and truly a good leader. Of course, today, many other fintech players in the Philippines and across Asia Pacific. And if we can, in the discussion, we'll go into that. So that's a lot of ground to cover. I just wanted to give opening kind of, laying the groundwork for Asia Pacific. It's a fascinating region, a lot of complexity and nuances and levels of financial inclusion, both between countries and within countries. And I'll stop here for now, and I really look forward to the questions and discussion. Thank you.
Thank you very much, Jennifer, for all those insights. Very interesting about the difference between access and usage. And sadly, I mean, in terms of savings, long-term savings and pension, it's something that I would believe had to be addressed immediately. I mean, given it's not just a financial inclusion thing as a check in the box, but focusing on overall sustainability. So that being said, our next speaker, a friend and a co-trustee in Ignite Foundation, let us please welcome Dr. Jaime Aristotel Alip. Dr. Alip, and please for our secretariat, please manage the slides for Dr. Alip. Thank you.
Thank you very much, Kay. Thank you to FINEX for again inviting me in this very important forum. First, let me give you a brief of the card of first the microfinance industry in the country. Very briefly, the microfinance industry has about 9 million families that are now being reached in the entire country. We have about 50 billion in terms of loan outstanding. In terms of the number of staff, we have over around 50,000 full-time staff. And this is manned actually by more than 30 active members of the Microfinance Council of the Philippines. I'd like to focus now on card being the largest. We are very dominant as a key player in terms of microfinance. We're dominating the market of around 78% of the entire market. Can you please present my slide, please? Okay, yeah, okay. As you can see, card is very dominant. We have 7 million active clients all over the country. We're present in more than 96% of the entire cities, municipalities, and villages in the entire country. And we have over 3,800 branches countrywide. Our total loan outstanding is about 27 billion as of September 2020. And our total insured individuals, because we're also doing micro insurance, is about 25.5 million insured Filipinos in this country, where we are again 80% of the entire market of the micro insurance industry. And I'm happy to note that we still have not deviated from our target clients. These are the vulnerable poor, the agriculture sector, and these are about 98% are poor women. We are also headed by about 80% of our executives are all women. 65% are our frontliners. These are women staff, and the rest are male staff. Next slide, please. By and large, the whole industry is trying to transform into digital transformation. Many of the MFIs are doing so. Card being one of the leading institution that transformed into digital, so that we're now using branchless banking, mobile banking. So we're making sure that the proper healthy protocols are being observed, social distancing, and clients need not go to the branches uh, so that they just go to the credit agents. We have a very powerful application. Similar to M-Pesa, we have this Connect to Card, and we have several thousand credit agents, and the clients can just go to that credit agent, and also they can withdraw, they can also release loan, put their savings, and also withdraw their savings, and also pay the micro insurance. We're also bringing that access to our microfinance players. We also have our own Card Sulit Padala. This is a remittance company so that we have just expanded also during this pandemic time. Next slide, please. We also have transformed our training program, our community markets into e-learning, e-doctor, and also our school. We also have our school for microfinance. Our students are now enrolled and they don't have to go to the schools, to our campuses. So they are learning and getting their degree program through our e-learning program. This is a regular program that we have already embarked. For our health program, we have e-doctor every day, one hour in the morning and 1 hour in the afternoon. We have this online teaching, and our doctors and nurses are the one giving healthy tips to our clients. And if we move to the next slide, please, quickly, we are now focusing on the agriculture sector. We're supporting health-related products now, food-related ventures. We're very heavy in agriculture. Other MFIs are also moving in that direction. And we're also introducing and pushing the micro insurance. And we have a new product that we have launched, and this is also being promoted to other microfinance institutions. This is the business interruption insurance. We have disaster insurance. We have health insurance, interruption insurance, and life insurance, so that you complete the loop for our clients. And the last slide, I know I have more minutes, but the last slide, I just want to give you some of the key indicator targets of card MRI for by the end of the year. Despite of this pandemic, we will still increase our client base as there are more clients now enlisting within the card MRI group. By the end of 2020, we will have an additional 700,000 clients. So we will have 7.7 million families by the end of 2020. Our total outstanding will be increased to 8.5 billion to a tune of 36 billion by the end of the year. And our total insured individuals will be from 25.5 million to 33.6 million. This is about 80% of the entire insured Filipinos in the country. Thank you very much for listening.
Thank you, Dr. Alip. This is very impressive. It's good to know that, as always, CARD is ahead of the game in terms of innovation. That's why no wonder CARD is actually a benchmark for microfinance in the world. That being said, from global, regional, we went local. Now we go to a subtopic, an important subject matter on microfinance. As you know, 70% of micro enterprises are owned by women. So to provide insights on women as regards to financial inclusion and their program under the Women's World Banking, let us please welcome Ms. Christina Means. Chris?
Hi, good morning. Hi, good morning, everybody. And thank you very much to FINEX, and also thank you very much to Dr. Alip. He's a member of our Southeast Asia Advisory Panel. So I'm hallowed to go straight after him. And as a result, this morning, I knew that there were going to be some huge statistics and achievements to follow. And so I thought I'd just sort of step back a little bit and talk to you about how organizations like ourselves help financial institutions broaden their product range and also reach more women. So I propose to use my 5 minutes today about that. And the first thing to say, if you could just turn to the first slide, is I just wanted to explain that Women's World Banking, we're a nonprofit. We're not actually connected to the World Bank. I know the title's a bit confusing, but we're a nonprofit started about 40 years ago, primarily in last mile microfinance. But over the years, we've changed. And our strategy now is to achieve greater impact by working hand in hand with financial institutions. So as you can see, we're active in 32 countries, and currently we have 64 global partners. And we continue to work with more and more partners in Asia. And that's why my colleagues and I are settling down in Southeast Asia and building up. So if I can go to the next slide. I just thought I'd show you some very quick slides in terms of some of the work that we do when we work with financial institutions. And one of the things that we can do is we can bring international donor funding to help an institution either develop a new product that is not part of their product shelf, or we can help them take an existing product and have better impact through that. And obviously, as Women's World Banking, our focus on is ensuring that as many women as possible not only have access to formal financial services, but they know how to use it, they feel comfortable using it, and they increase their usage. And so overall, our goal is twofold. One is to make the woman feel more comfortable and save money and save her own money, frankly, for the long term, but also for the financial institution. We want this to be a profitable endeavor, and we want them to be the drivers of financial change over time. So today, just thought I'd quickly talk about a project we did earlier this year with Ujjivan Small Finance Bank in India. And that was a typical microfinance institution that I think Jennifer was talking about, that it started as microfinance and then moved on to have savings accounts. And so one of the issues they faced was that while the women all had savings accounts, they weren't using them. So next slide, please. So as I said, we had a brief project with them, and the idea was to get the women that were saving informally to move their formal savings into Ujjivan. And so one of the first things we did some market research to find out what was going on. And we learned that the women knew they had to get a bank account to get a loan, but they didn't see it as the place they would save. And so therefore, in terms of Ujjivan, it was becoming an unprofitable product. Next slide, please. And so what we realized through our market research and through talking to Ujjivan staff and the people in the field was there were really two problems. You know, everybody always talks about the customer isn't doing it correctly, but actually we found at Ujjivan, because of their microfinance background and loans, the staff really weren't comfortable in terms of selling the idea of savings. So, you know, we had to look at helping the staff understand how to sell savings and prioritize it in their workflow. But also for the customers, we had to explain to them how to save, why to save, and give them a use case for savings. Next slide, please. And so, you know, essentially that's what we did. And so the idea was to pilot in a couple of districts and then to roll it out in full to Ujjivan. So next slide, please. So as you can see on the left side here, Ujjivan had group lender meetings that occurred regularly. And so we set up some materials in terms of how the center structure, you know, how the group meetings would address savings. We gave a specific but brief and focused savings pitch for the customer relationship officers. And then in terms of the women, we went back to good old paper. We found that a gold card and stamps, you know, good old fashioned, but was actually quite useful. And so those are the tools that we helped to move the process along. Please, next slide. And so this, I think, speaks a great deal. So we did a couple of pilots, and as you can see from the slide, we did 2 control and treatment groups. On the left half of the slide, you see in the North region for Ujjivan, we saw an 86% increase in usage and transactions and savings accounts. And on the right-hand side, we saw a 41% increase. Obviously, different nominal basis, but in both cases, a really important change in behavior. And then finally, the last slide. And so as you can see, I think the most important thing on this slide is to look to the dark blue cover, and that shows the number of transactions per customer relationship officer. And so you can see in both the treatment columns, which are the second column and the fourth column, the blue in the bar increases dramatically. So in other words, the savings account became more profitable and more productive for Ujjivan. So in closing, the reason why I wanted to show you this, I mean, I think people might say this is a bit basic, but the reality is today we see this over and over again. And this is valid for G2P, digital recipients, that they get an account in a state-owned bank in Indonesia or in a Wing e-wallet account in Cambodia. We use exactly this kind of process to either drive savings or remittances or peer-to-peer payments. You can have many uses in this. And so this is something that we look for. We always look to find a use case that makes sense to women. So whether that's bill payment or remittances or long-term savings or payments for their microinsurance, all very important in reaching women. So thank you so much, and look forward to talking more during the panel with my panelists.
Thank you very much, Chris. Thank you for sharing the various programs you have in Women's World Banking. I'll start with the first question with you. In this pandemic, actually, it made me reflect that it's not about financial inclusion after all. Because in the Philippines, we rank high in terms of the financial inclusion index. But if you look at the statistics in terms of people actually sustaining and being included, we're not there. So my question is, for Women's World Banking, have you changed your program in terms of focusing more on sustainability? I know you've talked about having capacity building, but in terms of changing also, making sure that there's monitoring and evaluation beyond the check in the box of financial inclusion.
Thanks, Gay. Monitoring and evaluation is always a key part of our programs. I think everybody gets better all the time, and the more we do, the more that we're monitoring and evaluating. But that's part and parcel of an international grant, and we do that as a regular course. I think stepping back, the bigger question, and maybe what you're getting towards, is we're not just interested in account activation. That's very clear. And in every project we do, we have sort of short-term, medium-term, and long-term goals. So, while the short-term may be to get a woman to feel comfortable in using an account, know how to use it, and, we call it do one, see one, model a transaction and start using it. Over time, we want them to increase their usage. We want them to build their credit risk profiles. We want to make it a habit. And then long term, of course, the goal is for women's financial resilience, making sure that they have more savings, they have insurance. And then also very important to us is a feeling of empowerment. And I can talk a bit about that later in terms of microinsurance. So that would be sort of my initial response to you.
Thank you very much, Chris. So this question goes to everyone. So I'm going to probably ask Ira, then Jennifer, Dr. Alip, and Chris to answer. So I read recently in an Indian newspaper, it says that the microfinance is the best place to help the economy out of COVID-19 crisis. Can you share your insights on this statement? Does this only hold true for India or for every microfinance around the world? Ira, please.
Yes, I think microfinance is critical at this moment. I thought it was very important up to now, but it's most critical now because of the increase we're going to see in poverty around the world. And also, the people who are going to have the hardest time getting access to finance are the working poor who are running micro and small business. I'll exclude medium-sized for the moment, but small businesses, and those small and micro businesses serve the family unit, as I said in my talk. They provide food, they provide clothing, they provide education, the basics, and we need to go back to basics during the COVID. So I see, quite frankly, this being a very critical moment, and I hope the donor community, I know there's a lot of pressure on the donor community, but I hope it steps up. I've been very active with one of the co-editors in the book, and Paul DeLeo, and writing some notes on microfinance and the crisis and what has to do to save the industry. We started that several months ago, and that catalyzed some thinking about rescue efforts in the industry. I'm amazed to see how well COD is doing. That's very encouraging. By the way, I don't know if I mentioned in my talk, but COD was one of the first institutions we funded, and I see that money's been leveraged. We provided capital grants. That money's been leveraged very well over the years by the institution.
Thank you very much, Ira. Jennifer, your thoughts on that?
Thanks a lot, Gabe. Yeah, COVID is really hitting a very broad range of people, incomes and lower incomes, and hitting the most vulnerable people the hardest. The World Bank and IMF are estimating that this double crisis, health crisis and an economic crisis, could put development efforts back years, if not decades. And we could see rising poverty levels. Ira made reference to maybe 80 to 100 million people could slip back into poverty just over this year. Now, a pandemic and the lockdown, the quarantining effects are especially, again, the World Bank is estimating that well over 80% of the 2.7 billion informal workers by the current economic lockdowns across the countries at different stages of quarantines and reopening and locking down again. And at a household level, we're seeing definitely rising medical costs, low income as people can't work, concerns about food security, concerns about can they pay rent, homelessness eventually. And microfinance institutions really serve this client group, lower income, but also middle income across many, many countries. So at a household level, microfinance service providers are really seeing their clients hit hard. And this is where I think savings accounts, like the types of accounts that Chris was talking with her partners in Ujjivan in India, savings accounts are really going to help people be resilient. They can draw down their savings if they're not able to earn at their regular income levels. And I think MFIs are well placed. They can really help react much more quickly because they already have a proven client base, proven client relationships, and sometimes over many, many years, which is absolutely core to their essence and their added value. And I really think these relationships are going to help people bounce forward. Just another last point on this is that I really think both the pandemic and the lockdown are accelerating towards digital. So we're seeing this certainly in the consumer retail sector. So many people are ordering online, but we're also seeing people take that into their financial and getting money moved, family members in different parts of the country or in nearby countries, and other financial services. So I think, again, MFIs are very well placed to respond, and we can use this situation, this crisis, as an impetus for progress to really emerge better, stronger, and use this to accelerate progress and bounce forward.
Thank you very much, Jennifer. So I'm going to repeat my question. So I read in the Economic Times of India newspaper, microfinance are best placed to help the economy come out of the COVID-19 crisis. So I want to get your reactions to this, Dr. Alip, and of course, Chris. Is this true for globally, not just for India? Dr. Alip.
Thank you, Gay. As you know, CARD is very strong, has a very strong presence in the Philippines and in Southeast Asia, because we also have offices in 6 countries in Southeast Asia. But let me tell you also that here in the Philippines, microfinance institution is considered as the last mile conduit from the big banks' financial institution to the vulnerable poor. And as a practitioner from the time we had this pandemic till this date, the card MRI group together with other MFIs are now providing actively and aggressively providing loans to our clients. We're reaching them because of our network of branches and units, over 3,800 branches. We're reaching the farthest clients that needs microfinance assistance. Surprisingly, our loan portfolio has been increasing, and our membership also has been increasing because we're able to provide the loans that they needed it most. We're very flexible because we're able to go to the clients right there at the village, because there are, especially in areas where there is no lockdown, but in areas where there is lockdown, consider Metro Manila, Metro Cebu, and other key cities in the countries, we have this connect to card. We're using digital and we're able to reach our client. Yes, the microfinance clients are really giving a very important key role in addressing and also in resuscitating the economic activities of our clients. So this is also what is happening in our offices in Southeast Asia, in Indonesia, Vietnam, Laos, and Cambodia. So, and Myanmar, of course. So I can say clearly that the microfinance institution is really having a great role in providing access to our microfinance client so that they can restart their business, and we're contributing to the economy. No other than the BSP uh, governor, Governor Jokto, has really pointed out that the microfinance institution and cooperatives play a key role in as the last mile conduit from the big financial institution to the vulnerable poor.
Thank you very much, Dr. Alip. Chris, your thoughts on this? Chris, you're on mute.
So sorry. Oh my goodness. I feel like I'm following Dr. Alip, and I'm fearful of my answer, but let me say something a little bit more controversial. I think that it's very possible that microfinance is the way out, but I think there are a couple of caveats. And I think that there's a potential for a real shakeup, and it depends on what market you're in. We held a panel last week with the Indonesian government's SNKI, the Financial Inclusion Council. And one of the things that just jumped out at me immediately, we had the President Commissioner of Home Credit Indonesia, and he said that they have 7 million borrowers. And when you compare that to Bank Rakyat Indonesia, BRI, which currently has 10 million SME borrowers. So I think that, in terms of the traditional microfinance, whether it's, like card, which has a lot of digital capabilities, I think the question becomes, are you ready to grow? Do you have the capital that you need to grow? Do the regulations allow you to grow? Because, traditionally in some markets, it's very hard to get additional products, or perhaps institutions aren't as nimble. And so I think, microfinance is absolutely there. As, Jennifer and Dr. Alip have mentioned, they have the relationships, they know the customer. So, what's really critical, if they are to be the way of getting us out of COVID-19 crisis, it's that they need to move on with what's going on. They really have to change quickly. But finally, I would say the one thing, we're working with a microfinance institution in Indonesia right now, and what they have, which a fintech doesn't have, I feel, is just this deep, deep mission inside to ensure that women are financially resilient. And so when we're working with them, that's something that really they have that a lot of institutions may not have if they're a digital lender or they're looking to do an IPO. So that would be my response to your question, Gay.
Thank you very much, Ira. Thank you very much, Chris. I have Ira in mind for my next question. Ira, I have a question for you. So with regard to MFIs, do you see them shifting now just from the micro entrepreneur market to the small enterprises? That crossed my mind because I'm looking at the job sector or the job concerns here in the Philippines. A number of probably middle class earners were laid off because tourism is down, because there's a repatriation of at least 500,000 Filipinos, and they are starting to engage in micro enterprises. So do you think that's moving micro enterprises to a different market? Are they also exploring small enterprises now?
I don't have uh, proof, demonstrated proof now. It's too soon in the crisis. But before the crisis, microfinance institutions were moving upstream to small enterprises and also to impact for example, Jennifer and I have been on the board of an institution that works with rural MFIs in Africa, in East and West Africa. And there's been a lot of emphasis on impact lending for agricultural value added, like irrigation and solar energy. So to the extent that MFIs are sustainable and have a solid base of capital, their ability to diversify their product offering became very important. I would suspect that MFIs will find small business a very important target market under these circumstances. I want to give one negative example. A number of years ago, I did a study for the US Treasury and the US Senate and the Association of Microfinance Institutions. They're not called MFIs, they have a different name in the US. And we compared it to international microfinance. And then we were asked to follow up and do a strategy for restructuring in the industry. Unfortunately, nothing came out of it. There was not funding, and a strategic firm was not hired to help them do it. One of the great problems for the US in providing support to small businesses has been the lack of institutional capability on the part of they're called community development finance institutions in the US. They're not sustainable. They've been dependent on subsidies. So a lot of the work we did in the early part of microfinance to emphasize sustainability was very important in international microfinance. And it's actually a very substantial failure in the US and preventing micro and small business loans from being extended as quickly and successfully as it should. So I would say, yes, small business is very important.
Thank you very much, Ira. So Jennifer, looking at the regional landscape, apart from card, of course, what would you consider a good benchmark, country level or even institutional level in terms of running a microfinance, especially under this crisis?
Well, I think you've rightly and has been for years model. In fact, when I was based in New Delhi with IFC, we organized a study visit to CARD. Just on your last question to Ira, on helping the microfinance financial service providers. They thinking about getting out of group lending and to individual lending, which is widespread in India, still very much group lending. And then thinking about the micro and SME, very S of the SME markets. And they met with their counterparts at organizations, but I think the Philippine sector is really incredibly diverse and vibrant, and a lot of good examples, and certainly with Card Bank. But I think in this crisis, but overall, any financial service provider, whether they're branding themselves as a solution or they're serving that market, and I gave examples of a broad range of different types of institutions that are involved in financial inclusion. But a few things that I think are critical is really to ensure the basics, and that's first and foremost excellent client service that I talked about earlier, to formalize and be regulated, supervised, ensure sound risk management, good governance, a good diverse capital base, well-designed services that are prioritizing convenience and affordability for their clients. That's absolutely critical. In addition, I think it's really critical to Christina's point, and also what I was saying earlier about this push towards digitalization, bouncing forward now with COVID and the lockdown and the economic crisis, is I think MFIs need to get under clients, get much finer use of data, understand their socioeconomic profiles, their economic activities, the old days of group-based lending and just what loan cycle are you on and an automatic increase up. That's not going to work. And it hasn't worked for at least parts. And I think financial service providers that understand that and can capture the qualitative and quantitative are going to be in clients. They'll be able to measure, price it, manage it, and develop relevant financial services. And in many cases, we're seeing, and this started in Kenya and East Africa more broadly, the nation, service providers outsourcing certain pieces of the service delivery or connecting with digital platforms and fintechs. And I really was delighted to learn in Esther's comments about FINEX as a fintech in the Philippines. But potential for partnerships, us, and those that are bringing in a digital platform, and maybe some consolidations. To Chris's point, there could well be some shakeout, especially from the economic crisis, depending how long these lockdowns continue across the different countries. And that is really, who knows how much longer we're going to be in this situation, and the effects on households, on businesses, and on the financial service providers that are serving them. But I really see a potential partnerships and collaboration, maybe some consolidation in the financial service providers and are not able to continue evolving and improving.
Thank you very much, Jennifer. Very interesting point on the partnerships collaboration, because in the recent study I did on InsurTech, I learned that banks in the 80s partnered with insurance companies, and they call it bank assurance. So now there's a trend of moving from microfinance to possibly partnering with the fintech community. That being said, maybe I can ask Christina, you've worked on the credit innovation aspect. That being said, I think innovation sometimes nowadays it's being made synonymous to technological innovations, when there are other ways to look at innovation in terms of structuring loans. How would you envision, like for instance in IFC, we have what we call income participation loan for our clients. We usually provide this when it's a greenfield, a new project. We don't charge the interest until they actually take off the ground. How do you see the right way of structuring and being innovative in terms of lending to women and even micro enterprise in general?
Interesting question. Let me sort of scroll back and say yes, indeed. I actually did want to respond to Jennifer's comment in terms of using credit and data. So for those of you that don't know, I headed Moody's in Southeast Asia for over 12 years, and so I'm very much a credit wonk. And one of the things I saw when working at Moody's, but also now, is you have all of these companies and you have so many more customers, you have a lot of data, you have large data sets. But one of the issues you find is twofold. One is that women clients, they don't have the same data footprints. And so, it's very important for us to help women build those data footprints. And then the second thing I just wanted to say very quickly was in terms of particularly fintechs or digital lenders, the requirement of regulators to make sure that everybody equally puts their data into a credit bureau. And again, this is across all of Southeast Asia. I'm not talking about the Philippines, but as we're getting these incredible flows of transactions, and it doesn't have to be a loan transaction, it can be just a savings pattern in any kind of a e-wallet or in a bank. It can be a loan repayment, it can be buying and paying for a refrigerator or a motorcycle that has to do an SME. We need to have all of that data go into credit bureaus, because ultimately the people that gain are the customers, because the more data you have, the more accurately you can assess the risk of women. And so the better and more efficient the markets are. So I'm just calling out, I think that's something that stakeholders and regulators across microfinance need to be talking about really openly. As Jennifer said, the days of keeping it low and not thinking too much about that should be over. In terms of the product innovation, Women's World Banking per se, is not a bank, so we're not engineering the products, but I would say two things. One is just in terms of the products, we really focus on simplicity. So for instance, the microfinance product that we developed with banks and financial institutions has no exclusions, very simple coverage, very simple to claim. And so I would say that's one end of the market. You just have to be very simple. If you're talking about taking a woman who really isn't used to working with a bank or a financial institution and is more likely going to a pawn shop or an informal lender, you have to make the products really simple and they have to be really obvious on what it brings to them. So that would be one. But on the other end of the spectrum, I absolutely agree with you, Gay. Part of the problem that women can't get loans is because they can't give the title to their property. So the house may be held jointly, or it's just impossible to get the title behind the loan. And so they lose out. They don't get capital and they're stuck. They can't get the money. So innovations, absolutely, in terms of supply chain financing. It's very big amongst fintechs. As Gay knows, I work for somebody in the Philippines that did invoice financing. I think that's fabulous. Also, in terms of some of the agricultural loans, there's some interesting projects, say with Mars in Indonesia, where they're doing a credit wrap to help farmers resoil their land. So there are many different products that I think are going to arise as a result. And I think because of fintech and the developments and the large numbers of clients, they're going to become profitable. And so I think that's a great feather in the cap for financial inclusion for women and for men across Asia.
Thank you very much, Chris. And very good note on the need to really have that central repository of credit information, and glad to share that's something in progress in the Philippines. To you, Dr. Alip, no doubt there's so much innovation in card under your leadership. And that being said, how else, we had a conversation before about the challenge in the camel ratio. How else, what are the policies that need to be revisited so that MFIs can continue, like card, can continue to be of help to a number of Filipinos? Dr. Alip, you're on mute.
Sorry.
Maybe we can Dr. Alip by explaining what camel ratio. Is it still a challenge for MFIs?
Actually, only on the portion of portfolio at risk, because the portfolio at risk, no doubt it has affected a number of the clients. They are unable to pay, not because they don't want to pay, but because of this lockdown. It's the physical barrier. There is no transportation. In fact, one of the questions of the audience here is that are the clients able to address these issues on the pandemic? In as far as the payment is concerned, we are very delighted and very pleased to see that the clients, because of the very strong discipline, they really have the will to pay. Unfortunately, the problem is the physical barrier. Transportation is a problem. For the case of card, because we have so many channels, we have aligned with uh, EasyPay, GCash, Pay Ayana, and even we're using also the convenience store. They're able to make payments. But in other MFIs, they do have problems on this because they're not yet on the digital space. So one of the things that we're addressing in our microfinance council meeting is addressing on the portfolio at risk. Can the provisioning be relaxed so that this will not affect their bottom line, and also this will allow members also to at least uh, restructure or refinance their loans. So these are the common problems that a number of MFIs are facing, the portfolio at risk, because this is part of the rating. Especially if these are NGO, we have this separate MNRC. NGO microfinance institution are regulated. And the other thing that is being concerned also is that the taxes, if that can be relaxed, because even the micro insurance of our MBAs are now in limbo, because the tax people are looking at it that this should be taxed when it should not be taxed, because these are mutual association, benefit association. So, and this is owned by the membership, like the cooperative. So these are concerns that are being faced by our microfinance industry, both in the microinsurance sector and also in the microfinance sector. The other thing is that I think if the banks can be more relaxed to smaller MFIs, so that they can give more loans to the smaller MFIs, so that the flow of microfinance credit to the vulnerable poor will continue. And surprisingly, really, I'm very amazed and very happy to note that the clients are really willing to pay. And there is our repayment rate is quite very high now. It has begun since July, when the lockdown in the Metro Manila areas and some other areas are eased down. Members are really paying. So that's the only thing I'd like to share.
So I trust Dr. Alip, you're having a continuous dialogue with BSP and relevant stakeholders to address your regulatory and tax concerns. So, Dr. Alip, are you having that dialogue with the government on the concerns you have for the MFIs?
Sorry, Gay, didn't miss that. I missed that one. Yes, we have regular consultation, not only with the BSP, but also with the Insurance Commission, also with the SEC, MNRC. We're also talking to Congress and also to the Senate bill, to the Senate chairs who are in charge of this financial institution. So we have a regular program, and they see the importance of the contribution of the microfinance institution. This is being addressed, and we are receiving favorable support from the policymakers, especially the Bangko Sentral ng Pilipinas. They're very supportive. Many of our requests have been relaxed, and they're very supportive on our microfinance institution,
It's very comforting to know. Thank you, Dr. Alip. So,
especially on the digital. They're very supportive in the digital,
that's
and
wonderful.
yeah, so it makes our lives a lot of easier, especially in the KYC. They now accept this digital, using the digital transaction, all these kind of things. So these are really very, very relevant, and we really admire this kind of very supportive policy of the Bangko Sentral ng Pilipinas.
That's very comforting to know, Dr. Alip. Salamat. Ira and Jennifer, I hope you don't mind if I touch on impact investing. Because, correct me, Ira, you are involved in impact funds.
I have been, not at the moment, but I was for several years.
Oh, that's good to know. And also, and Jennifer, of course, because Dr. Alip raised a good concern or issue that actually a plea to the banking community to be easy on MFIs or to lend more to MFIs. Are there opportunities within the impact investment community? I guess for Ira, I mean, since you've worked on impact investment, what's the criteria they're looking for when are MFIs as an industry able to tap to impact investors?
Well, you know, for a long while, the impact people did not try to differentiate themselves from the microfinance industry. And so they didn't consider microfinance a serious opportunity for them. But in certain markets, for example, rural financing in Africa, doing impact investment is critical for clients in order to take marginal farmers who can barely survive and upgrade their capacity to service service the market. And so PAMIGA, the institution that Jennifer and I have been involved with, built an initial impact fund, provided loans for impact and to its MFIs. And now it's building an equity fund that's going to do equity investments in small and medium companies doing impact investment in agricultural added value, in irrigation, in solar finance. And I was on the board of another institution in Costa Rica that raised a fund purely to do education through microfinance. And it funded education, not elementary or high school education, but college education, so people could build skills like in dentistry or computer sciences, or not in so-called liberal arts or so-called softer areas of education, but areas of education leading to direct job opportunities. They put together a $25 million fund that funded throughout Central America and Bolivia and Peru. And Paraguay was included, but nothing much happened there. But they funded 8,000 students over a period of about 5 or 6 years. And there was a lot of interest from the donor community in doing more. So there are several good examples of microfinance investment funds doing impact investment. Education's another area. One of the earliest private investors in the microfinance world who funded a fund of funds. He put $50 million. He was an Atlanta real estate developer, has been doing education in India and Africa through microfinance exclusively and doing it very well. So there's some very good examples of impact investing through microfinance. And I wouldn't say it's universal, but there are some very good unique examples out there. Jennifer could tell you more about PAMIGA. I stepped off the board last year.
Thank you very much, Ira. So Jennifer, I think it will be useful for the audience as resources are so constrained right now to really know what is the criteria, what's the set of criteria that impact investors are looking for. Can microfinance entities tap into those funding?
Yeah, Gay, I think, well, we should look at a range of funders. Into my earlier comments about getting back to basics and ensuring a good core institution, what investor or lender would be looking for are a lot of the things I mentioned earlier around solid leadership, good financial, but really it's about the services to the clients. Do they have a solid growing client base where, you know, they're providing excellent quality services? And are they regulated, supervised, really with a solid capital base on income and assets, equity. But in terms of examples, I just, yeah, you mentioned I had done a chapter in the book that I edited across Asia Pacific, and I did a second chapter on India. And I really would encourage people to look at that chapter on India. It's just an amazing country of financial, and they've leapt forward, especially in the last 10 years. But one of the things that's really fueled their growth, and I was living in Delhi from 2009 until 2016, and I was there during that period of growth, was a broad range of lending, and especially through the commercial banks and public banks, but a broad range of domestic and international banks who were on lending to a broad range of the last mile financial service providers, whether we call them microfinance institutions or something else, but those are the people, to use Iris's phrase, those are really the institutions getting financial services to that last mile. So that the debt market was robust. Second, a huge range of, again, local, national, and international investors bringing in debt, bringing in equity, guarantees, in some cases bonds. There were a couple of IPOs, et cetera. So it was just a really vibrant capital market related to financial inclusion. And a part of that are also, of course, the development finance institutions, as did you, Gay, and Ira. We can talk more about that. Of course, there in Manila, the Asian Development Bank. But there are so many specialized investors anymore that are really crowding into that space that it used to be just the donors, just the development finance institutions. And over the last 15, 20 years, it's expanded and massively, which is really good news, I think, for diversification, for a broader base of capital market structures and more stability, I think, diversity and stability in funding options for financial service providers from national sources and international sources. And just to, echo what Ira mentioned, the different areas, I think an MFI or a financial service provider more broadly that is doing very plain vanilla services may be able to get by, but increasingly it's, excellent client service, bringing in an aspect of digitization, whether it's, as I mentioned earlier, and Chris talked about this, capturing data, using it for better client services, using it where it's important for optimizing their own internal operations, lower costs, increasing scale. So it's not just technology for technology's sake, but really making the institution better. And then looking at a broader range of services, certainly getting beyond microcredit. In this day and age, it's about short-term savings, education savings, long-term savings, pensions. It's about insurance, as you mentioned, Gay, a broad range of types of insurance. It's about value chain finance, ag lending, getting to the microenterprise and SME, where possible, environmentally friendly options. Ira mentioned, smart agricultural irrigation or environmentally friendly, solar panels, improved access to water for households or businesses. So these are the kinds of things that investors are really looking for. And I'm currently on the board of 2 and advising investment funds. And I know that many are, really trying to double down and lean in. Ira is advising on setup of kind of emergency funds for MFIs, and some of the institutions that he and I know well are trying to develop those funds. I haven't seen anything specifically for the Philippines or specifically for East Asia. I've seen several global or Africa-based or Latin America-based. And I think a number of investors that care about this space to double down and support their existing investees, the institutions that they're already either lending to or invested in with equity first and foremost, because they understand them better. But over time, and let's see how severe this crisis is and how we can build out of this, there may well be more emergency type or recovery funds made available.
Thank you, Jennifer. That lifts the hopes for sourcing funding, although there's nothing specific in the Philippines, but then again, it's a matter of looking around. There are available resources in terms of funding from development institutions, from impact investors. That being said, Christina, may I ask you to expound more on the projects you have, particularly in the Philippines? Is there an opening for MFIs to work with Women's World Banking or any other programs you have in the Philippines?
Thanks, Gay. I have to honestly confess at the moment we don't have operations in the Philippines. We are just starting in, to have people on the ground in Indonesia. So this time we're not really in a position to do that. But I just wanted to circle back on Jennifer's comment about India and the amount of institutional funding that's available to support MFIs there. I consulted for a client there for a year, and I have to agree with her. That was just the amazing thing, that all of the banks had to put a certain percentage of their funding into certain preferred industries. And because of that, you had MFIs that were much stronger and indeed became small finance banks. And so I think that's really important. And I just wanted to say, one anecdote I heard last week, and I think this is a lesson for the Philippines and for everybody listening today. I was asking a fintech that services SMEs, where do you get your institutional funding? And the list came out, and it was not primarily Indonesian banks. In fact, it really shocked me. It was overseas banks. And I said, why do you think that is? And the response was twofold. One was that these banks really understood SME businesses, and so they were willing to lend. But the second of all, they said they were more aggressive, they were more nimble, they were interested in having new fintech clients. And so it's not only about impact capital, but I also think, in any balance sheet, yes, you have equity, but you also have to have loans. And so I think, it's a call out here to anybody who's working for a Philippine bank, to look at your own lending practices and see whether or not you've opened the gates more, that you're looking more favorably towards working with perhaps a new startup or a new fintech or a digital lender, and seeing what you can do to help support them in the time of COVID-19. Thanks.
Thank you very much, Chris. I think we're running out of time, but I'll end up with one question with Dr. Alip, and then go around for some closing statement from our panel speakers. Dr. Alip, I read your article. Actually, I learned the term entrepreneurial poor from that article. So MFIs are instrumental to reaching out to entrepreneurial poor. With the shift with the job losses right now, are you also taking on other segments in terms of lending beyond the entrepreneurial poor, specifically for card? Dr. Alip, you're in mute.
Yeah, thank you. Thank you, Gay. Yeah, we're actually reaching the poorest among the poor. These are the hard to reach area. These are the indigenous people, the small farmers, the fisher folks, and also the landless rural workers. So these are our main target beneficiaries also. Not only the entrepreneurial poor, because we want to give access to the poorest among the poor and make sure that they're able to create and establish their own business. And from our experience, once you give them that opportunity, even though how small the loans are, they will make it very, very productive. They're so creative, especially if you talk about poor women. So we believe in them, we trust them, and their repayment is exceptionally high, near perfect rate since we start the program. And we're actually very amazed with the savings mobilization that they're able to give. Lastly, I'd just like to point out on the note of Dr. Ira and Jennifer, I thank you for the help that you've given us many, many decades ago, because CARD was one of your beneficiaries in the SIGAP grants program. And we have multiplied your funding 1,000-fold. And today, when we got your fund, it's all we were just around 20,000 clients. Today, we have 7 million clients, families. And these are not only the entrepreneurial poor, these are the vulnerable poor, the hard to reach area poor people, and a lot of changes in their lives. Thank you very much.
Thank you very much, Dr. Alip. God bless all your work in touching the lives of the entrepreneurial poor. That being said, we're running out of time, but I'd like to give each of you the opportunity for a closing statement or some good insights you can share with the audience. Ira, maybe start with you, please.
Well, first, I'd like to thank Dr. Alip for just how well he proved the case. I remember, I think it was Dolores, one of his first CEOs who was at the Boulder Institute with me, who said they were going to go up to 100,000 clients. And I was very skeptical at first, but we believed in them. And he and his colleagues proved the case time and time again. So I'd like to learn much more about COD. I'm going to write to Dr. Alip and see if I can get some material on COD. I think that there are some terrific case examples of MFIs around the world. For example, Akleda in Cambodia, which went after the destruction of Cambodia, the killing that went on, and they came out of a social mission. Compartamos in Mexico, COD, BRAC in Bangladesh. I mean, there are such excellent institutions. And one of the things that might be worth doing, and also now the emerging institutions in India, all of which came out of crisis, it would be very good to build some, perhaps some case books. I wrote an article a number of years ago when several of the institutions went public. I wrote an article on the IPO of 4 leading institutions, but the article turned into be about why they were excellent institutions. And I think more could be done in the literature to cite excellent institutions around the world and why: the quality of their governance, the quality of their social leadership, their products, their emphasis on good financial stewardship, etc. So I think when we come out of this, hopefully not in the too distant future, I don't think we're in a short-term problem. I'd say we're in a medium-term problem with the virus at the minimum. When we come out of this, we should really be looking at robust institutions and how they did in the crisis and how they restructured and the lessons learned from the crisis, because I think that will be very important for the future of the industry. So thank you. This has been very interesting for me, Gay, and thank you very much to you and your colleagues for putting on this excellent program.
Thank you very much, Ira. Over to you, Jennifer.
Thanks a lot, Gay. Future of financial inclusion, and I think this current period crisis, pandemic and economic crisis, I think financial inclusion service providers can really help households and businesses hang on and survive. But when we get out of this, to bounce forward, I really see a need for financial inclusion for households and businesses. We have a diversity of institutions using a range of physical and digital platforms and services, a growing diversity of much needed financial services, again, for both households and businesses to manage their economic lives. So I just want to thank you, Gay. I want to echo what Ira said. It's just been a fabulous event, and thank you so much to you and all at FINEX for organizing this. And I just wish everyone well, be safe and stay safe and be well.
Thank you, Jennifer. Dr. Alip, for your closing statement.
Yes, once again, the MFI, microfinance institution, have proven to be very resilient. It has never reneged its number one responsibility to give loans to the needy ones. And we have proven that the microfinance clients are very, very resilient. They're very robust. They're helping our country in restarting the economy. And I'm very, very amazed that the repayment rate is going and on the rise again. And our clients, with or without lockdown, are making means and ways to make sure that the payments are given to the microfinance institution. So I have no doubt that the microfinance institution will contribute and is now contributing in restarting our economy, especially in the countryside. Thank you very much, Gay. FINEX, thank you very much.
Maraming salamat, Dr. Alip. That's a good message of hope to everyone. So, Chris, for your closing statement, please.
Thanks, Gay. I think that, what I would say is that, as I mentioned earlier about the customer journey, talking about the financial inclusion journey for banking institutions, COVID is a very difficult and challenging time for everyone. But I think to look at it from a financial institution, we should see that it offers an opportunity and growth points. Obviously, as people have mentioned, people are going from making payments in person, as Dr. Alip has said, to making payments online or through an app. So, let us make sure that all the financial institutions learn from this, take all the extra opportunities to do more transactions. And they should take the transactions and learn about their customers, figure out deep inside them what are their goals and their values and what do they want. And from that point, build even deeper customer loyalty. So let's not only worry about the customer's financial journey, but also for the financial institutions, and use what's a very challenging pandemic to grow overall financial inclusion in the years to come.
Thank you very much, Chris. Very nice message. So most of the gains in promoting financial inclusion was wiped out by the pandemic. With jobs lost, a good number of people are shifting to microenterprise as a source of livelihood. MFI as a means to open the door for the entrepreneurial poor or first-time entrepreneurs becomes more critical today. I believe there is an even bigger market for MFIs today. There is a future for MFIs. Thank you very much, Chris, Jennifer, Ira, and of course, our very own Dr. Alip for sharing your insights with us today. Special thanks to Chris and Ira and Jennifer for staying up this late in your time zone. But please do stay a bit for a group picture. Now I turn over to our MC, Tony Boy. Tony Boy.
Thank you very much to our speakers. That was a very, very, very enlightening talks among all our four speakers. And Phoenix would like to thank you for this. This time, I'd like to turn you over to the Phoenix Foundation chairman, who was actually our president last year, Mr. Ebot Tan. Ebot, for his closing remarks. Ebot.
Yes, can you hear me, Tony Boy?
Yes, we can hear you very well, Ebot.
Okay. Well, good afternoon, ladies and gentlemen. It is already past noon. It was indeed a very educational session we had today, learning about how our speakers contribute in their own individual way to the promotion of financial inclusion all over the world. It was very interesting, fascinating, and enlightening to learn of the strategies and best practices employed in various areas globally by MFIs to help alleviate poverty and assist small businesses and enterprises, especially those in the informal sector, those in the rural areas, and those involving women, achieve financial literacy, competence, independence, and eventually prosperity and resiliency. We have also heard of the challenges posed by the COVID-19 pandemic on the operations of MFIs. We are privileged to be able to learn from the insights and ideas of our speakers, who are all experts in their respective areas of endeavor and who all have extensive exposure and experience in practically all corners of the world, from Asia, including India, Europe, the Americas, Africa, and elsewhere. First and foremost, I would like to thank our speakers, Dr. Ira Lieberman, Dr. Jennifer Isern, Dr. Jaime Alip, and Ms. Christina Menes for sharing their valuable time and insight with us today. And as was indicated earlier, by the way, is in the evening for some of them in their time zones. I would like to thank FINEX's Financial Inclusion Committee, chaired by Gay Santos, with Ayan Guevara's LISO director. FINEX's Women in Finance Committee, chaired by Terry Magleo, with Larry Concepcion as liaison director, for working hand in hand in conceptualizing and producing this webinar for all of us. Thank you as well to FINEX President Jeng Pascual for his continuing encouragement of and support extended to the activities and programs of both the Financial Inclusion Committee and the Women in Finance Committee. I would be remiss if I did not recognize the hard work of our indefatigable FINEX Secretariat staff, without whose assistance it would have been extremely difficult to arrange this webinar. Most of all, thank you to all of you for attending and actively participating in today's webinar. We look forward to having all of you again with us at our future webinars and activities. Thank you very much. Maraming salamat po sa inyong lahat.
Thank you very much, Past President Eboy. He's the chairman of the FINEX Foundation. Thank you very much, FINEX members, and all those who have joined us. Thank you very much to our speakers. Everyone have a nice day.
Thank you. Thank
Thank
you.
you very much. Thank you very much.
Thank you very much. So I think, can we have a quick group picture, if you don't mind? Wonderful. So Terry. Okay, great. Judith, Alex.
Ma'am, I'll take the photo. Okay.
Thank you very much.
Okay, ready? Smile, 1, 2,